Hello everybody, welcome to our market briefing for Sunday, May 15th. Let's get right into this. First, of course, we've got to take a quick look at our disclaimer. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions, and all trading decisions are your own. Trade at your own risk. Alright, so let's take a look at what we got coming up this week. We have lots of Fed speak. Powell is going to be speaking on Tuesday. They're all going to be speaking a number of times through the week. So we'll have to watch out for that. We know that those guys can cause a lot of volatility intraday. Not expecting any big surprises. We kind of know what their position is, right? On Tuesday we have retail sales numbers. That'll be important. We also have a lot of earnings, even though earnings season is winding down. We'll look at this in a sec, but earnings season is winding down. But we do have a lot of earnings from some big retailers. And we have retail sales numbers on Tuesday, so that'll be pretty important. And also, Jay Powell is speaking at a Wall Street Journal event later in the afternoon on Tuesday. On Wednesday, we have building permits and housing starts. These generally don't move markets a whole lot unless there's a big surprise. Thursday we have unemployment claims like we always do on Thursdays, every Thursday. And we have new home sales on Thursday as well. New home sales could be, I mean, if they fall off dramatically, that could be market moving. And it could be the kind of thing, if they did fall off dramatically, it could be the kind of thing where bad news is good news. It would mean that, you know, the actions the Fed's taking is kind of starting to work its way through the economy. On Friday we have monthly options expirations, so we always expect lots of volatility as we come into monthly options expiration. We'll have to see some volatility starting on Thursday as traders are positioning for it, and then late in the day on Friday, you know, things can be really volatile, and some of your favorite stocks, especially the bigger stocks, tech stocks and the FAANGs and whatnot, you know, can get pinned to prices, and there can be some real battles going on. So that's always interesting. As far as earnings goes for the week, not much going on Monday. You know, there might be some names here that, you know, some people are interested in, but nothing market moving for sure. On Tuesday morning before the open, we've got some big names. So we've got Walmart, Home Depot, C Limited. I know a lot of people in the Discord are watching C. JD.com could be a mover as well. Not much after the close on Tuesday. And then on Wednesday morning, some more big box retailers. We've got Target and Lowe's, TJ Maxx, or no, sorry, that's not TJ Maxx. Target and Lowe's on Tuesday morning. Maybe Analog Devices might be interesting. Cisco for sure after the close on Wednesday. That'll definitely be closely watched. Not too much is terribly interesting on Thursday morning. Even Thursday after the close is kind of light. Applied Materials probably get some play. Friday morning, John Deere. I know that's been fairly closely watched for a while now. You know, especially with agricultural commodities have been doing so well. So you know they should do well, and they'll no doubt be expected to do well. So people will be watching that. So that's pretty much it. As you can see that, you know, we're starting to wind down, with the exception of some of these, you know, big box retailers. We're kind of getting into the, you know, second and third tier names for earnings season as things wind down. So we're going to take a look at the market now. We'll look at the major indices, of course. We'll look at some important commodities. We'll look at some of the major sectors, and we'll see if there's any nice setups. So let's jump right into that. We'll start by taking a look at the daily chart of the S&P 500. This is the SPY ETF that we've got up on the screen here. You can see that, you know, we had a very volatile week. where we kind of, we tried to break down basically, and we had a nice bounce here at this purple line, and we followed through on Friday, which was really important to see. This orange line here is something that I drew in during the ticker talk on Thursday. What a potential recovery might look like. I think that we do find some resistance up here. I think Monday could be a really nice day, but I think we're going to find resistance here, and we're going to pull back at some point. Now, whether this chops around a resistance, pulls back, and then breaks through, maybe it just goes right through this. Maybe it finds resistance up here. We don't know for sure, of course, right? Nobody knows exactly what's going to happen. So we're just playing out, playing through in our mind, what are likely scenarios here? And I think the most likely one is a stall into resistance, pull back a little bit, and then move higher. Of course, if we stall into resistance, we could start pulling back the next day, and just keep pulling back and break out to to new recent lows. Hopefully that doesn't happen. But we've had a pretty good, Friday was a pretty good day, and that Thursday turnaround was pretty good as well. So it's quite hopeful, and the sentiment had gotten so bearish. We were definitely due for a bounce. Am I ready to call this a bottom? No way. I'm seeing signs of the bottom in here. It may be, signs as a very short-term bottom, for sure, without a doubt. We were due for a rally, and a good rally. And we do see really strong rallies in bear markets. That's when we have the best rallies. And that's what makes this scary, trying to call a bottom. Because we can see all over this chart there are other places that we could have called a bottom, and all of those have failed to support. This might be the same, or this could be it. Maybe we're turning around here. One interesting thing I wanted to point out, and you're going to see this on a lot of charts. You can see this purple line. Does anybody know what this is? Can anybody want to take a guess at what that is? And I'll give you a hint. It's an anchored VWAP. For anybody who doesn't know what anchored VWAP is, or what VWAP is, I have done a lesson on VWAP and anchored VWAP. You can go back into the session recordings or back in Ternary and watch that lesson if you want. But let's start scrolling back here and see what this line is. Where does it come from? Oh, look at that. It comes, it's screwed up here. Let me see if I can get that back here. Oh, e-signal is being buggy. Yay. We'll get this working again. Apologize for that. All right, we should have this back nicely now. There we go. So that purple line where we found support on Friday is the anchored VWAP from the COVID low. You see how we bounced right on it, like almost to the penny. Pretty amazing, eh? And we'll see this on quite a few charts. There are other charts like the Qs. Actually, hang on a sec. I'm going to have to come back over here. There we go. If I bring up the NASDAQ, we'll see that we had broken down through that anchored VWAP a while ago, and it had been acting as support right in here, and we failed. So will that act as resistance on the way back up? I suspect it will. But it's still, we could still have a really nice move into here. And if we did move into here and then, kind of stall out but stay up in this area, that would be really nice. I'd be really bullish on that. We should look at IWM, the Russell 2000 small caps. And we'll see that we had broken through that anchored VWAP a long time ago, and it had actually acted as support before we broke through it. We have a nice bounce. What's interesting though is where this, this bounce that we've got goes back to all the way back to 2018. There was a resistance level in 2018, acted as resistance again in very early 2020, and I'm going to turn that anchored VWAP off. There we go. Acted as resistance again in 2020, and then we gapped up to it back here in, this was late 2020. It formed part of this gap, which was quite interesting. And now we came down to it, we flushed down to this support level, as you know, resistance becomes support, right? And we bounced right there. So that's really nice. That's, you know, another check mark in the column of, yes, maybe this is a bottom. You know, the way that the SPY was acting, the SPY and a number of sectors and individual stocks were acting on the anchor VWAP from the COVID low. The way the Russell is acting, you know, on this previous fairly major resistance, which is now becoming support. You know, these are all check marks in the column of, okay, maybe this is a bottom, certainly a short-term bottom. Let's take a look at the microcaps. And we see that these have turned up as well on Friday and had, you know, a nice big gap up, a gap and go on Friday. Still an awful lot of work to do here, and we have a gap overhead that was created on Monday. So let's draw that in, because that could act as resistance. That could act as resistance on tomorrow. Okay, there's our gap on that. Okay. So yeah, I'll be watching out for that. The VIX. The VIX's volatility index was acting interesting. Now, as volatile as things were all through the week, the VIX could not break out to new highs. And you can see that we kind of put in, you know, a series of lower highs in the VIX. I'll just highlight that here. You know, we've got, you know, a bit of a declining tops in the VIX here, and then a nice big, you know, nice gap down and nice big move down right to the 21-day moving average, and sort of this pivot that's become a bit of a support resistance area, which is where we're sitting right now as of the close on Friday. Will this continue to decline? We, you know, probably hope so, considering most of us are longer term investors. We want to see the VIX continue to decline, because if this is declining, then our markets are going up. The 10-year yield, this seems to potentially be rolling over. You know, it broke the uptrend this week, so that's quite nice to see. But it may be just taking a rest, maybe, you know, drawing another base like it did before. So this is worth keeping an eye on here. Let's take a look at commodities, but before we do that, I'm going to move over to trading views so we can take a look at the dollar index. As we know that the dollar index is very closely related to commodities, and you can see that on Thursday it had quite a strong move. But on Friday that pulled back a little bit, so that's good to see. We don't want to see it spending too much time above this level, because remember, this level is important. It goes way back to, I think it was 2016, early 2017. So that's quite an important level. We don't want to see us moving too far above that, because if the dollar index is going up, the stock market's going to have a hard time going up, and commodities will have a hard time continuing their run. So let's take a look at gold. So gold is continuing to decline. It's broken now. It's broken through this uptrend, so we can probably, actually I'll just leave that on there for one more week, just in case it bounces up too, and you know, it's possible we could bounce up and then this former uptrend becomes resistance. But it sure looks like, you know, there is a downtrend in play here. I'm going to get rid of that downtrend right there and draw in, look at this one going here. This downtrend here is definitely in play on gold. Will this level here, this, you know, around 1800, will that support? What happens if this continues to bounce up and bounces up into this downtrend line or this former uptrend line? or the 200-day moving average is right there as well. So probably a fairly critical week for gold to see which way this is going to go. But if silver is any indication of what's going to happen, I think we could expect, silver's telling us to expect to see more downside in gold. You can see that very similar downtrend, but the thing about silver is it broke through this major support level this week, or I guess late last week, and continue its way down. Sure, it had an up day on Friday, but this downtrend in silver seems to be intact and probably going to continue. The gold miners. Gold miners have just been a bit of a disaster here, but they are coming into a support area, and they did bounce on Friday. I wouldn't be terribly hopeful on these. Copper. Copper's, also been a bit of a disaster. Doing a little bit better than gold and silver, in my opinion, but not looking great. And some of our copper miners are not looking great either, like Freeport-McMoRan. Lots of gaps to the downside here. We had that bear flag we were targeting down here at 31.39. Well, it looks like it found a low for now at 33.46. Does the bounce continue, or do we get another one of these, little bear flag like that breaks down? Not terribly hopeful there. TECK is hanging in a little better. They're more diversified, away from just copper, although they are a fairly large copper miner. But their uptrend is trying to stay intact. A little bit of a breakthrough, but only for one day, and then Friday it got back up through it. So, yeah, tough to call some of these metals. Or tough to be really bullish on them anyway. Uranium has been falling apart over the past week. You can see it broke down out of the base, came down, pretty hard. We did have a bounce, potential reversal there, doji on Thursday, and then a nice gap up on Friday. I don't know. I'm not terribly hopeful on silver or on uranium. Let's extend this trend line because that looks to be almost exactly where that bounced. So yeah, I mean, this is kind of a place where you'd expect to see it bounce if it's going to save itself. But I don't know. This could be an opportunity for anyone who is late getting out of this to get out now. So there could be some resistance overhead. Cameco, the biggest uranium miner, it found support where it had to, and it started to bounce. But again, same thing here. There's lots of resistance overhead here. And this looks like one of those plays that may have run its course. General Commodities Index is not looking too bad. However, its uptrend is kind of starting to break. It's looking a little bit toppy, but we're not ready to call an end in the commodities rally by any stretch of the imagination by looking at this chart. But we are, we're coming into some resistance that has held fairly well. It's had a hard time breaking out to new highs here, right? It put in this pivot here at around 28.5 and was unable to get through it twice so far, and coming up into it a third time. If it can't get through in this third time, I mean, that could be a nail in the coffin for our general commodities index here. The agricultural commodities, this one's looking a little better. I mean, it's definitely looked like it's the short term has the trend has changed here. It got quite weak and then rebounded strongly. And there is, if we put a trend line on here, we have broken up through that downtrend, and we've closed above the 50-day moving average. So this is quite a strong recovery in our agricultural commodities. So it'll be interesting to see where this goes from here. There will be resistance ahead for it, right? Let's just drag that one across. Somewhere in that area there. So we got to watch out what happens when it comes up into this area another day or two, and maybe that breaks right through. If that breaks right through there with some strength, it might be attacking these highs. I'd rather see it sort of take some time in here take a rest, build some strength before it tries to break out to a new high. What's next? Oh yeah, MOO is the agribusiness ETF, and you can see that this one had broken down a lot. And you know, having a strong bounce, but it's going to need those agricultural commodities to break out to new highs, I think, before we can see a stronger bounce in here, considering the weakness in equities in the market. We'll take a quick look at some of the grain ETFs, like corn. Corn had a nice recovery during the week, pulled back a little bit on Friday, but this is, you know, this is sort of the kind of price action we want to see in a recovery. Be nice if that break, you know, if we have a green day on Monday, that could very well break out to new highs. Soybeans. Soybeans just starting to, you know, turn off a low here, just starting to swing up, so that needs to continue. We'll take a look at wheat. And wheat is so this is interesting. We had drawn this wedge in here. We need to adjust this wedge. So we'll kind of adjust it here. Okay, so we did get, you know, that wedge widened out to the downside, but still totally intact on the upside of that wedge. So does this break out? Now, you know, a rising wedge like this, we do expect to see it break out to the downside, and that did, but it kind of failed, right? And you know, it found support near the 50-day moving average. It's moved up. What happens here at the top side of this wedge? Can it break out at the top of this? That would be really interesting. So, you know, we could see a good move in wheat coming up here. Let's see. Let's move into our sectors. You know what I'm going to do? I'm going to actually take us over to FinViz really quick. Sorry, I should have had that ready to go for us. Let's look at our relative strength on the sectors for the week. So you can see on Friday everything was green and was led by consumer discretionary, and then technology and even energy was strong. But I mean, everything was very strong on Friday. Now, for the week, the top performing sector for the week was consumer defensive. And you know, in second place was communication services. And you can see that some of these sectors, and what's really interesting is our strongest sector on Friday, consumer cyclicals, was the weakest sector on the weekly basis. So that's quite fascinating. Quite the turnaround there on Friday, wasn't it? And our 1 month performance, and this just shows how bearish this market has been, you know, over the last month. All of our sectors were red, were down for the month. So, you know, the 1 day turnaround is not a trend. You know, it does not make a trend, right? We're coming off some very bearish action here. But you know, this does give us a little bit of hope. So let's go back to our charts and look at some individual charts of these sectors. It's the energy sector, XLRE, the energy sector ETF. You can see that we had broken this trend line. You know, we're putting some topping action here, but we're coming back up to it and breaking, you know, threatening to break out to new highs. I want to adjust this trend line here. We'll bring our trend line up into here, I think, now. So yeah, potential new highs here. And if we look at crude, now XLE, the energy sector ETF, is doing a lot better than crude is doing. Crude is, you know, still looking pretty good. It has been building a base in here. You could say this is a bit of an ascending triangle, maybe a bit of an ascending wedge. Let's get rid of that. Well, actually, let's move this trend line to, yeah, I don't like that anymore, that one. Just let me draw some new lines on this. So we've got a series of higher lows, and then we've potentially a bit of a wedge here. So I think given what we're seeing in XLE, there's no reason to believe that crude oil is not going to break out of this little wedge to the upside and break through some resistance that it's seeing right here. Very minor resistance here. I think we've got more highs coming soon in oil. So that's definitely a sector we want to be looking at. If we look at the oil and gas exploration and production ETF, not doing as well as XLE, looking very much like crude, but looking like it could move higher here. We'll look at the oil services ETF next. Same thing, a little bit weaker here. This bear flag broke down a little bit. It probably should have gone lower, but it did find some support. It's starting to move its way back up. There is going to be a fair bit of resistance on the way back up in this one, though. Occidental Petroleum looks ready to break out to new highs, but there has been a fair bit of resistance in this area. Let's draw that in as a zone of resistance here. That zone of resistance, kind of looking something like that. But ready to break out and through there, isn't it? It did get a bit of a boost through the week with more buying from Buffett. ExxonMobil, another one that could be potentially ready to go. Doesn't look too bad here. And these are probably, if we're going to be individual stocks in the space, it's probably one of these two, or there's a new one that I really like. These guys have really good numbers. I've been quickly looking at the fundamentals of this one. This looks like a really good company, and you can see that this has been a long-term uptrend, just a monster trend here. It accelerated a little bit, and now it's sort of built a base in here, right? And it is on Friday, broke out of that base. So this is really interesting to me. I know it's hard to buy this way up here, but a breakout like this has the potential to move quite strongly and have another leg up. You could play this on Monday and put your stop somewhere in the middle of this range here. You can see where I've got an alert shown here. So I'm going to be keeping a really close eye on this on Monday and seeing if it can give me a setup intraday to get in. It'd be nice if there was a little pullback to this 27 level and then it started to go up again. If that happened intraday, I'd jump all over that. So that one is the ticker on that is DMLP and is Dorchester Minerals, but it is in the oil and gas exploration and production space. The coal stocks are looking maybe a little toppy here. They had some trouble breaking out and they've rolled over a little bit. So we might see some more sideways consolidation in these things, or we may even see them turn lower. One more, Consol Energy, another coal stock. Looking very similar. Was unable to break out to new highs, but still not looking like a disaster ready to happen or anything like that. But it is finding some resistance here. Metals and mining. These have pulled back a lot, with gold and silver pulling back. Of course, these have pulled back. However, this is a nice, this was strong resistance and is now becoming strong support. And also the 200-day moving average right there, and it bounced right there on Thursday. So, pretty interesting setup here to see if this goes higher. Industrials. This is one that I wanted to... This is an interesting one here where this bounced. Here we go. Let's turn this VWAP back on. So yeah, you can see this is one of those sectors that bounced right at that VWAP from the COVID lows. Pretty interesting. This needs to get going though, because this could fall a lot farther. So we want to see those industrials pick up. Consumer discretionary, they've bounced when, kind of in, it's sort of in no man's land. I don't really see a lot of, I guess there was a bit of a pivot right back here that it seems to have bounced off of. Let's get that. Is that one right there? Yeah, a bit of a pivot level there that it bounced off of, so that's good to see. Really nice move too, but it dropped so much in the last few weeks, and there's definitely going to be some resistance overhead. We're going to watch out for this 161 level. So that was our consumer discretionary. Let's see. The retail sector, which is part of that, it broke down. It had a nice bounce on Thursday, a little bit of continuation on Friday, and this VWAP from the COVID lows could act as resistance on the way up, as will probably that 21-day moving average. Costco is one of the stocks that we have been watching closely. It has broken down quite a bit. It's found some support now. This 470 area, probably stronger support than the 481 where it bounced, but nonetheless we'll take the bounce. But does it follow through? And there's going to be some resistance overhead. We've got the 200-day moving average overhead now. Not good to see that break through its 200-day moving average, and it's also broken through this sort of intermediate term uptrend. So not ideal there. Financials. A little bit. Now let's turn that off. Okay, financials had broken down through what should have been major support, and they're finding support down here. Is it strong enough to continue a bounce up? Hard to say. Jury's out on this one. It looks kind of like we're going to see continuation lower in financials, which is not good for the overall market. Materials are just kind of chopping around, and are in a really big wide range that they've been in for over a year now. Tech, really important sector for us. Tech getting a bounce here. See this former downtrend line now acting as resistance on the way back up? We want to see that. We want to see that. See this continue up through here. Monday, tomorrow. Get through there and get through this resistance zone as well. Otherwise, we're in danger of this rolling over. What's next? Oh yeah, semiconductors. Semiconductors bounced at a pivot from back over here, so we're starting to find support in some levels that we're looking at, from the past, and it's good to see that it's finally starting to find some support there. We really need these semiconductors to get moving. If these semiconductors get going, we'll probably see the rest of the tech sector start moving as well. And this was, this is a pretty decent, almost capitulation on Friday. And then on Thursday, and then a really nice move up on Friday. So let's see some continuation there on Monday. One of the stocks maybe we're watching there is AMD, and it had, we have this major support level, and it found support where, it broke down through it really on Thursday, but immediately rebounded and then followed through on Friday. So that's good to see. What happens with AMD though when we get back up to this 99 level? Will it meet resistance again, or will it break through this time? We really want to see that breakthrough there. Let's see, Micron. Another one that found support on Thursday where it should, and is bouncing up, and now coming into a bit of a minor resistance area up in here. But yeah, again, we want to see continuation here. Communications sector, another one that we want to see, sort of bounce. I guess there was some support right there from the past. Let's get that drawn in. That would have been sort of from this area here, and it, you know, it did find support there. It's bounced off of that. That's good to see, but got to keep going, right? And there's going to be overhead in this. Looking at some of the FAANGs, Facebook, you know, had a pretty nice move. It moved into this gap, found support. Look at this level here. You know, we had a bunch of lows there where it found support. It had broken through that before, but it found support there on Thursday and it bounced and continued on Friday. So we need to see continuation, but there is resistance overhead here. Apple, again, found some support, you know, where it should have. We had a pivot level from back here. Seemed to find support there, or at least, you know, it was quite indecisive on Thursday, though, where other stocks were stronger, drawing stronger looking candles in this on Thursday. This one was pretty indecisive, but at least it followed through on Friday. Amazon, this was, I mean, this has had a terrible couple of weeks here, and I'm not sure if this was a level where it bounced. Not much of one, really. Yeah. So it found, you know, it found a place to bounce, and again, you know, we need this to keep moving up here. You know, I'm fine if it finds some resistance. If it can get a couple of days, 2-3 days, move up into here, and then, you know, not pull back too much, this could be really good for Amazon. You might want to buy a breakout that did that. But it's probably, you know, Amazon's probably a week or two away from even thinking about buying this thing, at least for the longer term. Netflix. So, has this finally found a bottom? I mean, you know, this thing is a total disaster. This level where it seems to have bounced at, though, it's going way back into 2017. One of those, you know, one of those levels that we were really hoping it would bounce at. So it did. And what's next for it? Because it's come into this area that was, you know, support. Is this going to become resistance now? And this support level goes way back in time as well. So we'll have to see what happens on Monday. Does it break through here? And then will this series of a few highs here, will that be a problem for it? Let's get this O's drawn in so that we can, we'll watch out for those during the week. So I'm going to just tweak that up a little bit here. There we go. Yeah, we'll watch out for this level. That's going to be 203-ish. Alright, so that was Netflix. Let's move on to Google. Google, excuse me, choppy mess in here. Will it continue higher? Hard to say. There's, you know, a little bit of resistance overhead. It was weak, you know, later in the day on Friday, though, right? That's a little scary. Tesla bounced where it really needed to on Thursday, but this candle on Friday is not really looking all that good. You can see where I draw in a potential move for Tesla that I thought we might see. I drew this in on the ticker talk on Thursday, so you can see we did move up. We're starting to move up, but we've got what is let me move that out of the way. There we go. We've got what is not a terribly great looking doji there on Thursday, but at least, or on Friday, sorry. At least it did, you know, kind of hold that gap, right? And you can see that I've drawn in what I think, you know, the most likely potential move for Tesla is it moves up back into this, you know, sort of 875 area, maybe finds some resistance, pulls back and puts in a higher low, and then starts to move out to new highs. That's how we'd see the beginning of a new uptrend in Tesla. Let's look at healthcare really quick. So healthcare, you know, looking bottomy as well. This 125-ish level is becoming pretty important for healthcare. In fact, I'm going to change that to major support now. I think, you know, one more, you know, it's had another bounce there. This is a really important level. So we'll see what happens going forward in this one. XBI, the biotech, very, very weak, but having a nice bounce. Pharma, same deal there. This is a nice little series of lows here. Nice little base it built, and then is breaking out of that. Can it get back up through this 41 level? Maybe go attack these 42s. That'd be nice to see. Nice move of Pharma up to around 42, maybe take a break and then start to move through. Eli Lilly we looked at last week for a play. It tried to, or it was almost a fake out breakout, and then broke down out the bottom side of that base. Is now moving back into it, but it's a little choppy. If we're looking at playing this, then the upside breakout level is still there, but the risk is widened out. Because that base is now widening. So, if you were gonna play it for a longer term swing trade, I mean your stop level has to come down a ways. But there's still probably a play in this. We'll have to see. REITs. REITs are kind of had a really bad week, but a half decent bounce. Staples. Staples, chopping around in here still. Maybe building a base. Not much exciting there really. Utilities, same sort of thing, maybe building a base, wide-ranging base in here, nothing terribly exciting going on. And finally the home builders. So the home builders broke support, only spent two days below it though and have moved back up, so that's kind of interesting, but they've come back up and stalled out on Friday right at that 21-day moving average that's declining. So there's probably a lot of resistance up in that area. I think home builders kind of need to go sideways for a while longer. But remember, we do have some, some housing and building permits reports coming through the week. So that could be that could result in a change of character in this ETF. So basically, I think that's about it. I've been seeing some talk about how I'm calling in the Discord about how I'm calling a bottom or signs of a bottom. And it's true. I mean, we are seeing signs of a bottom, but there's an awful lot of work to do still, and there's an awful lot of risk in this market. If we look at what I was potentially looking at for SPY again, and for the indices in general, I think that we need to come up off these lows. I think we need to consolidate a little bit, and then either pull back and put in a lower high, or just sort of consolidate and then break out to new high, or break out and put in a new higher high. But there's going to be a lot of resistance overhead here. And remember, we're in a bear market, and bear markets have the best rallies, and they're great at faking people out. So I just, I want everybody to be really careful. They're definitely tradable plays if this rally continues. But as far as investments go, I think it's too early to really be confident investing a lot of new money into this market right now. Let's take a look and see what we've got coming up next week. So on Thursday, I'm going to be doing an educational session. We'll be looking at dollar cost averaging timing, which is a bit of an oxymoron there, because when you're doing your dollar cost averaging, you're not supposed to be doing timing. But I'm going to show you some ways that will radically improve your returns on your dollar cost averaging. Show you two times during the month that you should be buying. And I'm also we're going to look at a filtering methodology using the MACD. Now, there's a small chance I'm actually having somebody program up in a little indicator for me in TradingView, and I was hoping to have that ready before the session on Thursday, and he's been stalling me now. He's supposed to be giving it to me on Tuesday. So if he takes an extra day or two and that thing isn't ready by Thursday, I think we should put this session off until the following Thursday and just move the ticker talk up into here. But I'll let you know what's going on here, if we're going to be doing a ticker talk or if we're going to, be doing this DCA timing session as scheduled. And then coming up for next week, we've got that Kahoot trivia contest. Should be a lot of fun. So hope to see you guys, through the week in the Discord, of course, and the session on the live session on Thursday. So hope everybody enjoys the rest of their weekend, their Sunday night, and good luck next week.